You're watching Market View ERS Tech Talk right here on Eswatini TV, the final edition for the year. My name is Notilisi Tole. Welcome to the program. The 2025-2026 salary review exercise was a major public sector reform with a significant fiscal footprint. Government allocated 800 million malangeni for the first phase of implementing the salary review recommendations for civil servants, though the Minister of Public Service indicated that the entire salary review exercise would cost approximately 2 billion malangeni. Now, with government admitting to a strain on the national budget due to this exercise, what about parastatals? Government indicated that salary review and adjustments for parastatals will not be automatically rolled out in the same manner as the civil service review, but are, of course, expected to be addressed separately and in alignment with broader fiscal sustainability objectives. In November, we had reports that consultant firms were already shortlisted and awaiting approval from the Standing Committee on Public Enterprise Scope. Now, as the year nears its close, what could be the latest? Find out as we speak to the Minister for Finance right here on the program. But first, business news. In our business stories, we begin with this. The American Embassy has availed close to 163 million malangeni towards the implementation of the Agricultural Mechanization Project through the Ministry of Agriculture under the Eswatini Agricultural Development Fund, EADF. Standard Bank Eswatini will avail a total of 250 mechanization packages to the National Maize Corporation and private tractor owners over the next 5 years, with John Deere providing the machinery. This was revealed by the Minister for Agriculture, Honorable Mandla Chauka.
Please allow me or indulge me a little to explain how the packages are structured financially. Firstly, we've got a 15% contribution from Eswatini Agricultural Development Fund as a concessional funding to the farmers. And then the beneficiaries themselves will be expected to contribute 10% of own equity into the cost of the package. Standard Bank comes in as a lead financier with a balance of 75%, because I've already mentioned 15 and 10, so that's 25. Then the 75% comes in as a loan component. So John Deere, through the American Embassy, is producing or providing what is called an interest buy down, such that the overall interest on the loans stands at 9.2%. I'd like to emphasize two important aspects that go with this project. One being that we expect those that are going to benefit in this project to have contracts with NMC, so that the equipment, tractors and implements are used by NMC to service the needs of those farmers, because it's not everybody that will buy a tractor, and it can't work if anybody has their own tractors anyway. The second thing is that we really would like this project to be treated as a business opportunity. To date, I've heard that there is about 4.9 million already, 4.9 million in loans already dispersed to farmers who want to take up this project, which tells us that we have struck the right chord. We've gone to where people are interested.
The Chargé d'Affaires at the American Embassy has pledged continuous support for the agriculture sector in Eswatini.
We will do more to assist the Ministry of Agriculture in areas that is challenging right now, and we will see what we can do in that space.
Standard Bank Eswatini Chief Executive Officer Mvuselelo Fagutse says the bank is ready to support farmers through this project, adding that the initiative will enable greater access to modern farming equipment and strengthen agricultural production.
To the farmers, most importantly, who are beneficiaries of this program, we would like to applaud them to continue the work that they do in our rural communities, in supporting our people who have access to tractors.
The executive manager for mechanization at the National Maize Corporation, Mangaliso Sihlongonyane, says they have previously faced challenges in providing mechanization services to all farmers. He notes that this support will help alleviate those challenges and ensure that farmers receive timely assistance, including having their fields plowed on time.
The challenge lebesibanayo all along ukuthi the tractors lesinawo akasiko sufficient to cover every aspect of our country, but we are grateful for this partnership. Letawukhona ukuthi linikete every farmer, every private tractor owner the opportunity ukuthi apartnerishe nelive sende isiqiniseko ukuthi siyakhona ukudondla sisive seMaswati.
The Minister for Agriculture says the first 50 tractors, including implements, are already in the country. Honorable Mandla Chawuka confirms that the packages include tractors with a choice of implements, including a number of combine harvesters. He states that the distribution will see 10 tractor packages allocated to the National Maize Corporation and 40 to private tractor owners every year. Reporting, Nelson Langamandla, Vuminkosi Nzinisa, Mbabane.
Following the outbreak of foot and mouth disease, the Minister for Agriculture, Honorable Mandla Chawuka, has announced that the ministry has introduced the Sell to Slaughter strategy. Under this initiative, farmers will be allowed to slaughter livestock within the same red zones at certified abattoirs.
What we are saying is that we are now opening up for Eswatini to sell their animals to slaughter, even in red zones. And this is very important for people to understand. When we say sell to slaughter, we mean exactly that. We are not selling the animal for somebody to keep elsewhere. We are selling it so that it can be slaughtered. That is why when we say we are opening for people to sell to slaughter, we then put around that program some conditions. One of them is that the slaughter must happen within an authorized abattoir. The reason for that is because there is a lot of controls, or there are some controls in those abattoirs. For instance, the blood is supposed to be contained and dealt with properly. Secondly, there is a process called maturation, whereby the meat is allowed to drain and the temperature is brought down and the pH of the meat is brought down. pH deals with the acidity or alkalinity of any substance. The doctors have told us that when the pH drops below 7, then the virus dies. They've given us the what they call standard operating procedure, or SOP, which then details how this can be implemented, how it supposed to be done. The other element of it is that we are not selling outside zones. We sell within the zone. So when you say we sell to slaughter in a red zone, we mean the area of origin of the animal and the area of slaughter should be within the same zone. So you can't take an animal, for instance, from a red zone and go and slaughter it in a green zone elsewhere, because by so doing, we have transmitted the disease. We want this to be contained within that zone so that only the meat which would have undergone maturation is then able to come out of that. And at that time, we are absolutely sure that meat is clean, it's got no virus.
And that is your business update this afternoon. Stick around. Market View continues after this.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit 6. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.sz.
Welcome back. You are still watching Market View ERS Text Talk, and now we'll head over to our market analysis segment, whereby in-house economist Anele Sibia is on standby for us. Good afternoon, Mr. Sibia, and thank you very much for your time. So, news just in: the U.S. CPI data is due today, of course, to provide inflation update after the shutdown gap, rather. So, with the inflation in the U.S. still above 3%, how much room does the Fed then have to cut rates in the new year?
Hi, Notile, a good afternoon to you and also to the viewers. I think what you are pointing to is quite poignant in the fact that markets are also watching that what the reading is going to be in terms of that CPI report, because it is really going to be what determines whether the Feds have a bit of wiggle room to continue with the downward cut in the interest rates. And remember that we've seen that the U.S. jobs market added some jobs, but the unemployment rate remains very high. So there is always that trade-off between the inflation and the unemployment rate. And then also what the Feds are going to do is also going to be impacted mostly by what we are seeing happening in terms of that CPI reading. And that is what the US markets are somehow pointing to. You know, there's a bit of uneasiness in terms of what to expect and what the new reading will throw into the conundrum that the Feds are already facing, because if the figures come out, pointing to an inflating economy, now that just puts a bit of some shackles on the Feds in terms of, lowering the interest rates. But the jobs numbers on the other side and the unemployment numbers are pointing to a fact where we need the Feds to cut down that interest rate. But if the inflation comes well above 3% again and with signs of an uptick, then it's going to be a bit tricky for the Feds to deliver that, not silly. So if we are now looking at the numbers, you can see that the Dow Jones Industrial Average actually lost 222 points in today's trade, and the Nasdaq Composite Index has lost 418 points, and the Standard & Poor's Index has lost some 78 points. So with respect to the Dow Jones Industrial Average and the Nasdaq and the S&P 500, those are blue chips, largely blue chip laden indices. And you can see that we are expectant and a bit worried about what the inflation figure is going to be and what it would mean for demand going forward. In terms of the Nasdaq Composite Index, if you're looking at the likes of Oregon, we're seeing a huge sell-off there, which still goes to show that markets are now at the point where they want the AI trade to deliver profits, instead of a promise. So there is a bit of those valuation fears weighing down on markets as well. And then you compound that with the expectation of an interest rate cut and the inflation reading today. So that makes it for a bit of a tedious market there. And with the Nasdaq Composite, if you can look at it, it's below the 23,000 mark. Now it's back to 22,000. And then moving across the pond into the UK economy, we can see the FTSE 100 is actually up marginally by 18 points. We are waiting for the Bank of London, the Bank of England, to actually make an announcement in reaction in respect of what they're going to do with the interest rate. And it is highly expected that that announcement, I'm sure, is actually being made right now. And we should see a further spike if we get that cut in the interest rates within the UK economy. Germany there remains relatively sluggish at 23,999, gaining some 38 points. Just showing a bit of movements in line with the shopping season. But at the same time, what we are observing regarding the U.S. economy does, begin to point into likely demand constraints into the future, and that export-heavy German economy is actually feeling a bit of that pinch. The CAC 40 flatlining there at 8,100. Showing that the festive season really is doing well to make sure that France stays above the 8,000 mark. And then coming into Germany, into Asia, the Nikkei there closed at 49,000. Just slightly down by 510 points, largely given the fact that we are worried, those demand worries coming through from the US, and the fact that the tech sell-off in the US is also being felt within the Japanese economy. The Hansei flatlining at 25,000, and the Shanghai Composite Index flatlining at 3,800 there. Just showing signs of fundamental weaknesses, more especially within the property portfolios in both Hong Kong and in the mainland region. And we are just hoping that we can maintain this momentum until we get to the new year and we begin to see those stimulus packages coming in from Beijing, and how that is going to show up the markets. South Africa is doing relatively well, given the fact that gold continues to do relatively well in international markets. So the South African Stock Exchange gained 173 points in overall trade volumes, just largely supported by those minerals there. And if you look at what copper and silver are doing in the markets, they're also just heading for all-time highs, which then goes to support the miners and the overall JSE index. And then in terms of the Eswatini Stock Exchange, we've not seen much change, still remains relatively the same there. And then gold has somehow lost a bit of ground there, largely due to the fact that we are waiting and expectant of that CPI data to come through today. But one way or the other, if the CPI comes up relatively higher, we expect gold to continue flourishing. And if it comes relatively lower, it's going to signal that the Feds are going to start cutting interest rates. Again, we expect gold to continue rising. So whatever the way the market comes out, gold is expected to continue rallying. And then in terms of Brent crude oil is now below the $60 per barrel mark, largely due to those oversupply considerations, and also the issues to do with, those peace talks in Russia and Ukraine, and the impact of a resolution of that crisis in terms of the oil markets. And then in terms of the currencies, I think it's just not a good week to be receiving dollars, but it's a very good week to be buying, dollar-based items, because the exchange rate continues to just impress. We are back. We are now below the 17 mark, and we've maintained this for the past 3 days, largely supported by the rally in gold and the overall, optimism about the South African economy, which then also tends to have an impact on the Lilangeni. And also against the euro, we are trading at 1965 against below that 20 mark, which we're used to seeing. Again, we are just, that upgrade in terms of South African rating agencies rating the South African economy in a much better light. Now that is beginning to be felt through the currency markets, as there is a bit of faith being restored around the South African economy. And we are doing relatively well against the Japanese yen at 9 Malanga 30 cents for one Lilangeni. It requires 9.30 in terms of the Japanese yen. Thank you, Notsile.
Thank you very much, Mr. Spear. That was economist Sanele Sibia sharing insights on the day's trade. Stay with us. We're in conversation with the Minister for Finance after this.
Eswatini TV has signed a code of conduct that is enforced by the Eswatini Communications Commission. We are committed to reporting news that is accurate, comment that is fair, and programming that does not amount to hate speech or the description of gratuitous violence or explicit 6. For any complaints of our programming, please contact us on 2411-9600 or email info@eswatinitv.co.za. You can also contact the Eswatini Communications Commission on 2406-7000 or write a letter to ECCOM on PO Box 7811 Mbabane. Email address is info@ecom.org.za.
Welcome back, and as promised, the government's 2025-2026 salary review exercise is one that has had a heavy impact on the national fiscus. As civil servants benefit from the review under a phased approach, concerns arise about the position of parastatals and state-owned enterprises. To shed light on this, we're joined by the Honourable Minister of Finance, Neil Weikenberg, who comes to us virtually on whether a salary review for parastatals is on the cards, how it would be funded, and what it means for the country's already strained budget. Good afternoon to you, Minister, and thank you very much for your time. Perhaps you could just give us clarity here. Is a salary review for parastatals planned?
So correct. Thank you for having me, Notile, on the show. It definitely is planned. So we've actually been planning it for more than a year. There was actually a glitch in the tender process. We had no one actually sign up for the first time we went out on tender for this. But we went out on tender again, and the tender has not been successful. So we have actually concluded the tender process to actually find a consultant to do the review. So it's definitely on the cards. The review will definitely be started early, first thing in the new year. Actually, the review we'll be looking at, keeping in mind it's a salary review and a benchmarking exercise. So it's a combination of both. Really is trying to make sure that not only do we look at entity by entity, but also looking at entities across the board. Because for a while, we've only been allowing state-owned entities that have been performing well to actually do salary reviews and to do salary benchmarks, meaning that those entities that are not doing well have really lagged behind very badly, almost making it very tough for them to really actually now come around. So the idea is to try and bring some kind of, not to say it'll all be equal, we'd have different ratings of parastatals, but to bring some kind of equality also across parastatals is part of the agenda.
Right. From your response, Minister, then I'll conclude then that the salary review will be budgeted for in the 2026-2027 national budget or upcoming fiscal year. With that said, can you perhaps give us a ballpark figure here? How much does the government have or is willing to spend with regards to salary review and adjustments for parastatals?
Unfortunately, what we don't have yet is any kind of number on this. And so the budget process is still just, the process has started now. And so we are now looking at all the different parameters. We haven't yet even put in an indicative number yet on this. It is still to be discussed at the different levels within government. And that is still to be looked at. And so unfortunately, we haven't got a response on this yet, but I'm sure in a few months' time, by the time I do my budget speech, it'll all be very clear.
And considering that civil servants are still being paid under an existing salary structure, how does the government then plan to, in some way, fund this salary review?
Look, ultimately, one has to always do the right thing as government. And so, it was a very long time before one had done a salary review for civil servants. It had to be done. It was done. It's going to be very tough for us next year because of the salary review. It's going to take a large portion of the, let's call it the increased budget that we're going to be having next year. But at the same time, it was necessary. So one has to view this in a similar light, is to say that if this comes through, to be able to say one needs to do this, we are going to have to look at the parastatals and see how we can support that. One needs to understand that only a certain amount of the parastatals get subvented. Many parastatals are self-funded, which means that they are generating their own funds and they don't get a subvention from government. It is only those that are subvented which will probably need to be looked at from a budget perspective. And so we are not presuming that it'll be a massive number, and far from what the salary review of civil servants look like, but there will be an amount, correct.
Right. And while we speak on subventions, will then the government be considering increasing subventions to cover the upcoming salary review?
So that's what we're looking at the moment. And so at the moment in the budget process, like we're undergoing right now, this is exactly what we're considering. We're considering, which ones should we look at, where do we feel the impact will be, and to try and make a guess. Now, one doesn't know exactly what the outcome will be. So a bit like the salary review process, we'll have to maybe budget something for it. But at the same time, because you don't know the outcome, it's very difficult to try and hit the number exactly. We might have to see in the year what that looks like. Unfortunately, also won't be a quick process, so you probably find it'll only be maybe mid-year. I'm not so sure when the process will be finished, and one will then see how one implements that. So it probably won't be something that will be hitting us too early in the budget cycle. So we'll have to probably budget something and then again handle it when we know the truth of the outcomes of the review.
What could this mean, or what then happens to the parastatals that are not making?
Sorry, I think we cut there slightly, but I think you asked about what are those parastatals that can't afford. So yes, many parastatals are subvented, meaning that they can't afford to carry this by themselves. There's a lot of pressure on parastatals to become more and more self-supportive. It's not ideal having many of our parastatals being subvented. Many of them were set up with a self-sufficiency route. In fact, most of the intention behind a parastatal is the fact that they can generate income and be able to survive off their own salary, or the subvention will mean that we're going to have to consider them if the salary review is showing that they need to get better salaries.
Thank you, Minister. Good news is the government is considering a salary review for parastatals, but then now the big question is when? Do you have a timeline of when we can actually see this review being implemented?
One doesn't know when exactly the outcome will be. The nice thing is now we have finished the process. The process will start early in the year. We are planning for the process to take a few months, but at the same time, it'll be difficult to try and also we don't want to create an expectation of exact date, because unfortunately, sometimes a review comes and one has to spend some time on it and consider it and digest it, see what is affordable, what is not affordable. And so, the process will take a while. But I foresee, worst case, third quarter 2026, actually it being fully finalized.
My final one, Minister, if the government will be placing some form of restrictions on parastatals when it comes to increases, especially during this period of fiscal pressure?
So, I mean, we are looking at parastatals overall. I mean, we have done a review of parastatals, and we have recognized that, we probably do need to try and merge some of the parastatals. We possibly need to bring one or two back into the ministries, privatize one or two of them. So the review has shown that we actually do need to do quite a lot of work there. But we have decided that our PEU legislation is limited in the sense to being able to implement this review and to try and do what we need to do to consolidate and empower many of the parastatals to do better. So we have now, we are in the process of reviewing the legislation. The legislation should be in Parliament early next year. And once that legislation is passed, we will then really go hammer and tongs at looking at virtually consolidating the amount of parastatals. Having about 50 parastatals is too many for a country like ours. And so that consolidation process is planning to bring them down to about 30 parastatals is what the plan is. Again, this is still just initial stages I'm talking about. The full process it'll look very different by the time we finished with it. We know that. But with that process, we foresee a lot of fixing taking place within state-owned entities.
Minister, that's all the time we had. Thank you very much for your presence this afternoon, for joining us actually on the show. Thank you. That was the Minister for Finance, Honorable Neil Reichenberg, showing insights on the proposed, or rather, the salary review exercise and adjustment for parastatals in the country. With that, we wrap up the 2025 edition of the Market View ERS Text Talk. It's been quite the year. We're signing out for the rest of the year. Happy holidays.